JJ the CPA here, breaking news on the SBA's guidelines that have come out as it relates to the self-employed. Much needed guidelines. Really has simplified it, makes it easy. A couple of big things to note is that the loan is going to be based on 2019 Schedule C, period, the end. The only way it's not based on 2019 is if a business was not in business in 2019, and then you can base it on 2020, but it says additional information to be released on how that would be done. So for those of you that are sole proprietors, but here's the thing to know, that's a Schedule C. A Schedule C is where 1099 miscellaneous is reported. So I know we have a breakdown between independent contractors, the eligible self-employed, as well as the sole proprietor, but all of those in a practical manner are reported on Schedule C unless you are an independent contractor that doesn't deduct any of your expenses. Then of course you're just taking in your 1099s and you are indicating that that is your income. You don't have any expenses. But I've never had a client that that's happened to other than they get that $1,000 or $2,500 1099 miscellaneous that's kind of a random, they went and did a speech somewhere, something to that effect. So let's focus back on Schedule C. And I know we're using the word sole proprietor, but all you need to do is look at your tax return in the past if you're not sure, and did you file a Schedule C? That is now the golden ticket to everything. So we have thought before we had this direction, could we use the last 12 months? Could we use a P&L from last year? And the answer from the SBA is no for the sole proprietor, self-employed, independent contractor that is using Schedule C. It is going to be the 2019 Schedule C, and it is going to be line 31. Now check this out, okay? This isn't a good thing in my opinion, but what is clear here is that it's line 31 and that's it, okay? It does not include the self-employed health insurance premiums or the self-employed retirement. Seems unfair to me, but at the end of the day, what it's indicating here is that for the self-employed, if it covered those things, it would be like a windfall, to use the SBA's words. So it is simply line 31. So I'll be updating some of my schedules, and by the time you've probably heard this, if you're 3 hours after it's been published, I've already updated everything on my website by then, but I'll update the checklists and the worksheets that I've got, but it pretty well simplifies it. Here's your Schedule C, line 31, divided by 12, times 2.5, we're done. Now, I'll have a couple of videos, but it did indicate clearly you don't need to have already filed your Schedule C for 2019, meaning you can bring in a Schedule C for 2019 that you haven't filed yet. Now, the key to that is whatever it is that you are bringing in would need to be what you're filing with the IRS. So even if you are still not where you're going to file the return, maybe you're waiting for other information for other parts of your return, you are going to want to get your Schedule C to a finality that you can then use. Now, you'll see I'm going to be doing a video that will be how do you prepare Schedule C. It'll come out today, and once I'm done with it, you'll see it referenced in this video body. But one of the other things I want you to know is that if the Schedule C has employees, it walks through how that's done, which is very similar than we always thought, which is you're taking that payroll cost, which is basically from the 941s, and if the sole proprietor is paying for health insurance and retirement for the employee and deducting that on Schedule C, that is included, as well as state unemployment tax. But what's clear here is the amount that the sole proprietor is paying for themselves, for their health insurance, for their retirement is not included in the calculation. How do I know that? Because on Schedule C, you do not deduct, the sole proprietor does not deduct their health insurance or retirement, because that's deducted on Schedule 1, not on Schedule C. Seems a little unfair to me. in the sense that that self-employed individual is having to make those other payments, but because they're self-employed, it would be considered by the SBA to be a windfall to pay for such costs, because an employer, I guess, has a different obligation to its employee for such benefits. So it does simplify it. So I'll have an updated schedule related to if you are a self-employed and you have employees, self-employed sole proprietor on a Schedule C. There are some interesting things in here. I'm going to do an updated list of what it is that you are able to count as payroll cost for yourself, which very simply is what is the net from your line 31 Schedule C, divide it by 52 times 8. That is the amount that will be forgiven for payroll cost for the self-employed individual. No additional documentation needed. The difference between that and the amount that was taken, assuming no payroll to other employees of the sole proprietor, then can go towards these other expenses. But there's a nice list that's been included in here, a couple of things I wasn't anticipating. And so I'll have a separate video on that. And once I shoot that video, I will have it referenced in the body of this, as I'm going to just shoot and release to get this information out as soon as possible. So I'm really enjoying the fact that we got some final determination, so to speak. I really wish it would have been sooner than this, because we could have had a ton of self-employed individuals, quite frankly, that could have been using the last 2 weeks to be putting together their Schedule C. So I have been saying, you need to get the Schedule C, you need to get your P&L, you need to get it together so that you can give it for the loan. So you still need a P&L, but the P&L would be prepared to Schedule C. But at the end of the day, all that's to be provided is the Schedule C. Makes it pretty simple. If you haven't filed it already, I'm going to have a video to kind of walk through how do you prepare it. So here's the end of the line on this one. We have clear-cut guidelines now for those that are getting the self-employed loans. And the one thing I want to point out to you is that in these guidelines that the SBA has made very clear, here's what it is that you need to get the loan. Nowhere in here does it say you have to have a business account. Doesn't say that. All right, banks? It doesn't say you need to have a loan. It doesn't need to say you have good credit. It doesn't need to say blah, 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 that all these other bankers are saying. Basically, it's here's my Schedule C, okay? If I don't have any employees, here's my Schedule C. Now, there are a couple other items just to show that you've been in business, 1099, a bank statement, an invoice, showing that from 19 as well as in for 20, but simple stuff. I mean, simple stuff. So the sole proprietor, self-employed, independent contractor, the Schedule C filer, it should be an easier time than even the others that are getting the businesses done to get this approved. The other thing I'll note to you is that still maintain there is nothing in here that Schedule E, page 1 is now, not now, like it never was, not now. It's clearly not included, okay? Rental is not included. The one other thing that it mentions in here that I'll talk about is that from the standpoint of the partnership, okay? If there is self-employment on the partnership K1, okay? And not all K1s have it, but if there is self-employment income on the partnership K1, then it's the partnership that will do the PPP. It's the partnership that will add that to the wages of the partnership. Now, how is that going to apply to partnerships that have already filed that under the previous guidelines, it would have not been included? It would have been only the payroll costs. So I'm unsure if those partnerships are now going to be able to go back and reapply. That will be told. I don't have any clients that applies to. I don't have any clients that have partnership K1s with self-employment income because that's not my structure. I don't think it's a good way to go. So I personally don't go that route with any of my clients. We're all S Corps if you're going to be active, period. And we're partnerships for what you're going to own and not be actively involved with, or what you're going to own in its real estate, period. So I don't have any clients that I've got to figure that out for, But if you have a situation where you had a partnership that went and got the PPP, and now you have a K1 that was not included in that, then you're going to want to get with the bank right away, whether you've been approved or not, to see if there's something you can do to go and get those additional dollars. It doesn't say that you can't do it at the individual level, but what it's saying is it needs to be at the partnership level. So I don't take it as it's an either or. I take it as it's possible that if you're already in the process and you're including the self-employment down at the individual level, but that would be someone that's like moments away from approval, moments away from that partnership to be getting approved. So these are effective immediately. It states in here that there's been no advance warning. They don't need to provide it. They make it very clear in here. Basically, they're saying, we're the SBA. We can change the rules effective immediately. We don't need to provide public comment. We don't need to let you know in advance. And here they are, boom, right now. So I'm going to have a series of videos coming out tonight as I unwind the details of this and get things updated, and I'll get it to where I'll have up on the screen on how to put together a few things. I'm just glad to get some clarification. All right. Hey, listen, I would love it if you'd subscribe. JJ the CPA here. And don't you ever forget, you've never met a CPA quite like me.